Okay, so I'll do this fairly quickly, but I'm going to spend a little time talking about what's going on in the marketplace. And as real estate investors, you want to be a student of the market. You want to know what's going on in the marketplace. So we learned a bunch of strategies just now. Now the question is, what's going on in the market? What works now? How do you do this right now? And another thing that the REIA does is we provide market data to our members on a constant basis. So let's talk about the market. So question for you guys, what's the big story? What's going on right now in real estate? What's happened over the last couple of years? What's that?
Inflation's gone up.
Inflation, interest rates went up. Interest rates changed, okay. So we have different interest rates than we had before. So let me ask you guys a question. Are interest rates high or low? And it's opinion. Opinions cannot be wrong. So let's do a vote. Even you guys in the back of the room can vote. What do you think? Who thinks interest rates are kind of high right now? Who thinks interest rates are kind of high right now? Who thinks interest rates are kind of low right now? Look at that, we got a mix. And everybody else is eating, so they didn't hear me. Okay. I would say a mix is a good answer. In my opinion, interest rates are normal right now. Okay, I've been buying rental properties for 21 years. I now own $30 million worth of rental properties, and most of them have a mortgage between 6.5% and 7%. Because by all historical measures, that is normal. Now, a few years ago, interest rates got down to 3%. Is 3% normal? No. In fact, prior to a few years ago, when was the last time that interest rates before that got down to 3%? Does anybody know? That would be never. Like never. Like it never happened before in your lifetime, your parents' lifetime, your grandparents' lifetime, your great-grandparents' lifetime. When do you think it's going to happen again? Never. I would guess never. I don't know. We can't predict the future. But my guess, never. In your lifetime, your kid's lifetime, your great-great-great-grandkid's lifetime. You know, and the thing that would have to happen to make that happen again, you're probably going to be way more worried about the zombie apocalypse than you are about interest rates, okay? I doubt it'll ever happen. I don't know. We don't know. Now, when interest rates go up, what happens to home prices? Do they go up or do they go down? What do they do? Who thinks when interest rates go up, home prices go down? Who thinks when interest rates go up, home prices go up? You're all afraid to answer the question, aren't you? Yeah, there's no right or wrong answer when it comes to an opinion. Well, I would say they do both. Yeah. Interest rates pushes prices both up and down simultaneously. Now, the truth, real estate doesn't care about interest rates. Real estate doesn't care about the economy. Real estate cares about two things, supply and demand. So only in as much as something affects supply and demand does it affect real estate. Now, for sure, when interest rates go up, mortgages are more expensive, which means fewer people can afford them, which means there's less demand. That's true. But there's something else going on. What's going on? Historically, 2/3 of houses that are for sale are resale, and 1/3 are new construction. At the moment, it's inverted. It's 2/3 new construction, 1/3 resale. People are not selling their houses. Why not? Because they got a 3% interest rate and they don't want to give it up. So what should be happening right now is people should be saying, honey, let's buy a bigger house. But they're not. And the reason they're not is because they got a 3% mortgage and they don't want to let it go. So consequently, even though there's less demand, guess what? There's also less supply. So we have things pushing up, we got things pushing down. Another thing about interest rates. Why did they raise interest rates? To battle what? Inflation. So you hear a lot about inflation. And when people talk about inflation, what's interesting is they always talk about it like it's this bad thing. Inflation is bad. We have to whip inflation, stop inflation. Personally, I disagree. Personally, I love inflation. I adore inflation. I just have another name for it. I call it appreciation. Yeah. When all of your wealth is in real estate, you love inflation. Because what is inflation? Money is worth less. Well, that means what is worth more? Assets. When you have inflation, where do you want your wealth? Gold, assets, real estate. How many of you owned a house for the last 3 years? Who's owned a house for the last 3 years? Nice. You're a lot richer than you were 3 years ago. Congratulations. What if you had 20? What if you had 200? What if you had 500? Can't go back. You can do anything you want going forward. You really believe in 20 years it's going to be any different 20 years from now compared to now versus 20 years ago compared to now? It's the same thing, guys. It's the same thing. So yeah, we got things pushing up, we got things pushing down. In fact, in a national basis, we're actually in the middle of a housing crisis. Did you know that? Yeah, we have 6 million fewer houses, right? And that's why prices haven't dropped, not much, because we just have too many houses, not enough houses. So let me give you some data. This is Texas. The average price house in Texas is $417,000, up 3%, year over year. Prices are flat. You got things pushing up, we got things pushing down. You put it all in a blender and you push the button, the market went flat. Median price in Texas, $339,000, up 0.3%. In other words, it's flat. The market has been flat for about a year. Now, the most important data point on this slide, I would say, is this one right in the middle. If you really want to know what's going on in the marketplace, you look at this number, months of inventory, months of inventory. What is months of inventory? Here's the way to think about months of inventory. If you took all the houses on the MLS for sale and you stopped adding any more houses for sale, you just sold what's for sale and you don't add any more, how long until we're out of houses? How long would the supply last? And the answer is 4.8 months, which is also the average amount of time it takes to sell one house. Now that's average. Some are more, some are less. 4.8 months is average. Now, to put that into perspective, they say if there's less than 6 months of inventory, you're in a seller's market. If there's more than 6 months of inventory, you're in a buyer's market. If there's right around 6 months of inventory, you're in a neutral market. Well, guess what, guys? We're still in a seller's market. Now, perspective. A year ago, there was 3.7 months of inventory. A year ago, we were in a strong seller's market. Now we're in a warm seller's market. But we're still in a seller's market. People are like, the market's down. What does that mean? It's not as hot as it was, that's true, but by historical standards, it's still a seller's market and not a buyer's market. And 4.8 months is still considered a seller's market. Now the volume is down. There's less buyers for sure, but there's also less sellers. And that's why the prices haven't moved. Now go through some history. 2021, prices went up 18% in 1 year. 2022, they went up another 10.7% in 1 year. 2023, flattened out. Flattened out. Let's go into the different cities. Houston. The average price house in Houston is $415,000, up 2%, not much. Median price house in Houston, $335,000, up 1%, not much. Months of inventory, 4.4, about the same as Texas. Not as good as it was a year ago, but about the same as Texas. 2021, prices went up 16%. 2022, up another 10%. 2023, flat. Very similar to Texas. Lease prices, here's a little commercial data point. Lease prices are up a little. When lease prices are up, what does that mean? Does that mean the commercial properties are empty or they're full? It means they're full. Yeah. When the rental properties are empty, leases go down. When the rental properties are full, leases go up. It's supply and demand too. Big Dallas, DFW, the average price house in Dallas, $499,000, second most expensive major city in Texas. Flat. Median price $395, down 1%, basically flat. Months of inventory, 4 months of inventory. It's the hottest market in Texas. A year ago, it was 3 months of inventory. The trend, 2021, up 20%, 2022, up 15 more percent, 2023, up 1%, basically flattened out. Austin, let's talk about Austin. Now, Austin is an outlier, and I'll show you why. But the average price house in Austin, Texas, $549,000. That is not a typo. Isn't that crazy? That's average. Down 5.5%. Median price, $425,000, down 5.6%. Months of inventory, 4.6, not bad, about the same as the state. But there's an outlier going on in Austin. What is the outlier? I'll tell you the outlier, 2021. In 2021 in Austin, Texas, prices went up 29% in 1 year. In 2021 in Austin, Texas, there was 0.4 months of inventory. Less than 2 weeks of total inventory. Never anything like that before. In Austin, Texas in 2021, you would put a house on the market, you get 11 offers in a weekend. 1 would win, 10 would lose. The 10 that lost, they'd put an offer on a second house that got 11 offers in a weekend. 1 would win, and 10 would lose. And this happened again and again until people started screaming violently at their realtor, "What's wrong with you? You're giving me bad advice. You keep telling me to bid the wrong amount. I keep getting overbid. I need a place to live." And in that very abnormal market of Austin, Texas in 2021, in that abnormal market, it became normal for people to buy houses at 5 to 10% above appraised value. Do you know the bank will not let you buy a house above appraised value? Did you know that? Your total down payment and your total bank loan cannot exceed, even by $1, the appraised value. If you really want to buy a house above the appraised value, you put down your down payment, get your loan, and then after all that, you have to pile a big chunk of loot on top of that. And it was normal in that very never happened before abnormal time of 2021 to buy houses at 5 to 10% above appraised value. 2022 prices went up another 10.4%, and then in 2023 they went down 8%. So most of Texas, they went up 30% and it flattened out. Austin went up 40%, came down 10, and it flattened out. What's the difference? I guess the difference is when you bought a house. You bought a house a year ago, you lost some money. If you bought a house 3 years ago, you made out like a bandit. And that's perspective. But that was because of 2021. San Antonio, the most affordable major city in Texas, average price $372, down 2%, median down 1%, $312, 5.2 months of inventory. It's the slowest market in Texas. The history, 2021 up 16%, 2022 up 12%, 2023 it flattened out, down 2%. We'll call that flat. Where's the market going from here? Well, let's talk about what is driving the market. Number one, the economy. Now, real estate doesn't care about the economy directly. It does indirectly. You know, only how it affects supply and demand. Like during the Great Depression, real estate prices went down a whopping 6%. During the Great Pandemic, another 1 in a 100-year event, real estate prices went up 30%. Not the economy. Not directly the economy. But, you know, if the economy is doing okay, people are a little more likely to buy a house. What else? Consumer confidence. Consumer confidence, where they ask consumers, how confident are you? And they ask you to rate it on a 0 to 200 scale. Anything over 100, people are confident. Anything under 100, people are scared. Right now, we're at 103, just over the middle. People are not confident, but a little confident. They're a little more likely to buy real estate. Unemployment rate, solid, less than 5%, solid, full employment. People have jobs, are a little more likely to buy real estate. Job growth rate, yeah, we're creating a lot of jobs, especially here in Texas. That's good. People have jobs, are a little more likely to buy real estate. Stock market, now, stock market does not directly affect real estate, but it indirectly affects it. If people's 401ks went up They feel wealthier. If they feel wealthier, they're a little more likely to buy a nicer, bigger house. So last year was pretty strong. Interest rates, there's something pushing down. You know, when interest rates go up, right, houses are less affordable, so that's something pushing prices down. Home price trajectory is flat. That's not really up or down, it's flat. Closed sales trajectory down a little bit, but that's starting to turn. Pending sales trajectory is also flat, not up, not down. Active listings, flat, not up, not down. Yeah, we're adding them more, but just at a very moderate pace. Months of inventory is still pretty good, 4.7, right? Still a seller's market, a lukewarm seller's market, right? Housing permits, yeah, we're not building enough houses. And that's a problem. It's affecting supply because we don't have enough supply. That's pushing prices up. Now, this one should be like a triple-sized bullet. Not all these bullets are the same. This is a big one. Migration. What is migration? The ratio of people moving in versus people moving out. Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? Yeah. And then there's like 5 or 6 million other people. We don't know where they went, but a bunch of them are here too. So in other words, we got a lot of people, and we're not building enough houses, and everybody needs to live in something, right? And that is putting a lot of upward pressure. We're not building enough, we don't have enough, so there's a lot of upward push pressure there. Construction labor, we got a problem. Contractors are dying. The average general contractor is like 58, 59 years old, and they keep getting older because they're not getting replaced. So if you have a young child, a teenager, here's my advice. Do not send them to college. Buy them a hammer. Yeah, make them a contractor. They'll make way more money. Contractors make more than surgeons. You know that, right? They'll make way more money. They'll get no student debt. They won't have to work for some jerk, right? They'll be happier. You won't have to pay for college. They'll have a better life. I went to college. My dad went to college. Now I have a teenager. He's not required to go to college. And if he wants to go to college, I don't have a problem with that. It's just not a requirement anymore. I think there's plenty of things you could do to make a lot more money that don't include college. And then there's some wild cards. I hear there's an election going on, right? And then there's some wars going around. There's some inflation going around. So that's what's driving the market. So what do you think, guys? What's your opinion? Who thinks prices are probably going to go up? Who thinks prices are probably going to go up? Who thinks prices are probably going to go down? Okay. Got a couple ups, got a couple downs. Who thinks prices are probably going to stay sideways? Okay. Yeah. So I'll give you our forecast. If you were waiting for the market to bottom, that was probably it. That was probably it. You know, we had things pushing up and things pushing down, right? The supply and the demand both went down. Prices flattened out, and they've been flattened for a while. The little thing that's starting to happen is interest rates are starting to come down a little bit, but we don't expect them to do much. So our forecast is we expect the interest rates will continue to drop. They'll probably drop a full 1% by the end of the year. They already dropped 0.5%. That's what the Fed is saying. That will cause mortgages to go down a little bit. We're never going to get it down to 3, but we're getting into the 5s. And that should open up a little bit of the floodgates on the supply and also juice a little bit of the demand. So we expect sales to be up maybe 1% by the end of the year and prices to be up maybe 2% by the end of the year. We don't expect much to change, and we don't see anything big on the horizon. And by the way, just to add a little disclaimer than that, we don't have some agenda to try to persuade you the market is going up or down or sideways. There are groups out there that are always saying it's going to go up or it's going to go down or whatever, right? We've been doing forecasts, and this is not my forecast, I just report the forecast. We've been doing these forecasts for 20 years. Our forecasts are generally spot on. And it's not because we're super smart, it's because it's not that hard, right? Predicting the economy is hard. Predicting the stock market is impossible. Predicting real estate is not that hard. And then the reason is because we know everything. We know how many houses we have. We know how many houses we're building. We know how many people are having babies. We know about how many people are moving here. We know about how much we need. We know how much we're going to have. So we know just about everything. The only thing we don't know for sure is exactly what's going to happen with interest rates, but we even have some ideas about that. So based on all that, there's nothing shy of an unexpected nuclear bomb that's likely to move things dramatically up or down. We expect it to just kind of trickle along the way it is. And that's not a bad thing, because in a market like this, you can make a lot of money. Sometimes it's easy to buy and hard to sell. Sometimes it's easy to sell and hard to buy. It's never easy to buy and easy to sell. But what I like about a normal market, that would I describe this market normal in every way. What I like about a normal market is it's not hard to buy, it's not hard to sell. It's not easy, but it's not hard, right? So all of the strategies work in this kind of a market. And I highly recommend you jump in if you're not in already.